Alright, welcome back to our channel, MegaWhale team. Thanks for tuning into tonight's video. We're going to be taking a look at Bitcoin again today, talking about the recent price action. We've had a pretty significant rejection on the dotted line, on that trend line, on the ascending channel. But we also want to dive into the DXY as it broke out of a pretty major horizontal resistance, as well as take a look at the log scale and the long term for Bitcoin. If you have any questions, leave them down below. And remember to like, comment, and subscribe. Join our links to our Twitter and our Telegram in the description. And if you want to learn how to trade, you can come over to our Crypto Academy course, where our 10-unit course, Become a Trader, launches in only 2 weeks. You can acquire in the email in the description. Let's dive right in. So Bitcoin has had a pretty nasty rejection on the dotted line. And of course, the dotted line was holding as a significant support line throughout this entire ascending channel. We can see that recently we dropped below it, pushed up, and we just had that confirmation of a support resistance flip, and thus a rejection from that trend line. We can expect naturally this price action now to continue to bleed downwards to retest this bottom trend line. So right now, guys, the short answer to this whole video, and we're going to summarize it real quickly, is we do expect the price to continue downwards to retouch this trend line. It really is as simple as that. There's not much else to go over, but we do have a lot of other things to be talking about besides Bitcoin today. So let's dive right into it. The DXY. DXY has broken upwards, and if we zoom out on the DXY, we'll just go to a 14-day chart, we can see the DXY has been in this massive symmetrical triangle formation for literally the last 21 years. And we're not even joking, 21 years, June, April. So here we go. June the 1st, 2001. All right, the 1st of June, 2001. Insane, all right? That's nearly 21 years this symmetrical triangle has been in formation, and we recently broke out. Not only did we break out of the symmetrical triangle, we broke over the $103 major horizontal resistance. This is significant. This is incredibly bad for cryptocurrency, incredibly bad for stocks, all asset classes, and it'd be really interesting to see what happens here if the DXY continues upwards from here or fails to hold above this 103 level horizontal resistance and actually comes back down to maybe retest the symmetrical triangle. If that happens, the entire market, including crypto, could see some relief. We're going to talk a little bit about that now. So we talked about this in our other video, I think maybe a week ago with Wolves of Crypto, but essentially this kind of, a lot of things actually deleted here, but we'll just talk about it anyway. This kind of summarizes how inflation, how the current global economic environment, how money printing, how all of this impacts risk assets. And obviously cryptocurrency being a risk asset, including the stocks, you know, including I would argue most liquid assets such as the houses or housing market, equities, these are all risk assets. These all get impacted by what we're going to talk about now. So essentially you have the government, which borrows money from a lender. Obviously when you borrow money, you have to pay it back. So you accumulate debt, and who pays back the debt? Well, the taxpayers. The taxpayers pay back the principal on the loan, and also pay back the interest on the loan. So you have this environment which is called funding economic growth through debt. And we've seen that happen if we take a look at the global debt. The global debt has increased tremendously in the last 10, 15, or even 2 years. The government has been funding economic growth through debt. It's very obvious. It's everyone knows this, all right? But that's essentially how it works. How does that affect you? When more money is taken as debt, they generally print money. The Federal Reserve or the RBA or wherever you're located, they're going to be printing money. What does that do? Well, it increases supply. When you have an increase in supply, it messes up the supply-demand balance, and you have a decrease in demand generally. So increase in supply, decrease in demand equals less value. So the dollar is now valued lower. Simple as that. What does that mean? It means your purchasing power decreases. If your purchasing power decreases, generally the difference between the cost, the dollar cost and the cost of goods become greater. So now we see, cost of goods increasing, which is, fuel. We've seen a prime example of fuel, food, services. All these other variety of other things will start increasing in price. So what does this do? Well, it decreases the average household savings. It decreases the average household, I would say, available income or available spending. which decreases their ability to invest. All right, so you have the retail investors now having less free cash flow to invest, as more of their savings is either going into living costs or going into repaying debt on their or interest on their loans. If you've got a mortgage, for example, and interest rates rise, you're going to be paying more money back. But it goes broader than that, guys, and that was just a base summary, but it goes much broader and much larger than that. If we're taking a look at who controls the global markets and taking a look at who has the majority of money in risk assets, we're looking at institutions. And the last few years, institutions have been taking on a lot of debt to buy risk assets. They've been what you would call over leveraging their positions, taking on a lot of debt on low interest of interest rates being low to accumulate assets such as houses. I know in Australia you can buy insurance companies, and companies can buy residential houses in Australia, which is one of the reasons why our Australian housing market is ridiculously expensive or way overvalued. But we take a look at cryptocurrency. A lot of institutions have been loading up on cryptocurrency, particularly last year, and we saw the cryptocurrency market explode. The problem is, guys, when interest rates rise to combat the increase in inflation due to the increase of supply of dollars, we have a scenario where these companies, these institutions who have massive amounts of debt because they're funding through debt, they're buying through debt, now have to pay back more cash into the interest or the principal of the loan. What does that do? Well, it forces these companies to have to sell their assets. And we've been telling you guys for ages, we've been saying for 2, 3, 4 months that companies are going to have to start selling off shares very soon to increase their cash flow to make their balance sheets look more healthy. And we've seen it. Look in the last few weeks. Facebook, Amazon, Netflix, all these companies, massive sell-offs. All right, people are starting to offload their shares, offload their cryptocurrency, offload their risk assets for cash. And why is this important? Well, should I say, why is this prevalent, or how can we see this? Well, the DXY is a prime example of that. It is a visual example of that whole cycle we just talked about, which is these institutions and retail offloading risk assets for cash, because this is how strong the dollar is in comparison to these other assets. And the dollar is rising, meaning that more cash is in more people are taking money out of assets and putting them into dollars. So what does that mean for Bitcoin and the global economic environment? Well, we talked about the global economic environment. We've kind of talked about how that impacts Bitcoin. But if we take a look at Bitcoin's, I would say, structure, or the state of which Bitcoin is in, we're in a very hairy situation. And we take that and we apply everything we just talked about to that situation. It doesn't put Bitcoin in a very good position if we're assuming Bitcoin is going to behave just as other risk assets. And I do want to say, first and foremost, guys, Bitcoin has actually surprisingly done quite well in comparison to other risk assets, in a sense that stocks have dropped considerably more than Bitcoin in the last year. I think Bitcoin is only year to date, Bitcoin is down about 17%, where most stocks are over 30, 40, 50% down. So Bitcoin, although isn't a hedge against inflation, and although it is not safe against a global economic crash from what we know of, we don't have enough data, it is still actually performing quite well for now. I'm just going to say that. But there are a few things we do have to keep in mind. First and foremost, guys, underneath the 200-day moving average on the 3-day, significant sell signal here, indicating we are in a massive downtrend. And we can see a lot of altcoins are breaking out of these weekly structures. They're breaking out of diagonal resistances, but there's just not enough momentum to keep that price from moving upwards. We've seen it so many times. An altcoin will break out of a downtrending resistance. It looks good. Technicals look great. It has awesome support, great momentum. It will break out and instantly get sold, capitulated, and crashes downwards. There just is not enough buying momentum. And it's very hard to be trading in downtrends or significant downtrends like we are seeing now with this strong sell pressure. And it's only going to get worse, guys, unfortunately, as long as we remain below the 300. But I do want to point out this channel, guys. This is a saving grace, I would say, for Bitcoin. It could either be the saving grace, or it could be the Achilles heel in the sense that if we lose this channel, guys, we're in for a very, I would say, unfortunate few weeks or few months But it does suggest one of two things. It can suggest we are actually priming up here for a bounce. And I know a lot of the data, we're going to go back to the short time frame in a second and take a look. It's suggesting otherwise, isn't really suggesting we're going to be bouncing. And I know the long-term data isn't really suggesting we're going to be bouncing, but basing off this channel alone, and this is just taking one bit of information. And of course, we do have to keep in mind during this whole period here, we didn't have any economic issues in the sense that we weren't in an economy where inflation's through the roof, or spending powers decreased massively, or debt's through the roof, or on the verge of an economic financial crisis. We were quite stable, steadily growing. Besides that COVID crash, we were quite steady. So there's a very high chance this channel could be invalidated and we can actually break below it. And if we break below it, we will see a nasty crash, similar to what we saw in the COVID-19 crash, similar to what we saw in the the July crash in 2015. Very, very, very nasty, or potentially even a crash like we saw in 2011. It's going to be hard to tell, but we've already done our long-term prediction of $24,000, and we have that 200-day moving average creeping up over here. On the flip side, guys, can we bounce from here? It is possible. If we do find support along this line and we maintain it, we can definitely push upwards here and form a new uptrend. I think that we haven't talked much about this scenario, and I don't think I want to talk much about that scenario because I really just don't think it's going to happen. I would say the chance of that happening, although possible, is just considerably lower right now. If we take a look at Bitcoin, of course, just going to the week, just going to like the 3-day on the Bitcoin chart over here, we can see we're breaking out of this ascending channel. And ascending channels, they're bearish structures, but we can get a measured move target just from taking this ascending channel, drawing our measured move from the top down to the bottom, copy and paste it over. We can see where we're heading. This already says $12,000, and that's, you know, the maximum drop we could see from this kind of pattern play out. This will be the absolute maximum drop we would see. I don't think we'd go any lower than this. This would be absolute worst case scenario. If we ever touch this, I'd probably put 99.5% of my net worth into Bitcoin because this would be the lowest we'd go. But we've already talked about, you know, short-term targets or where we would think the price would be bottoming, and that is just a 200-day moving average at around $24,000. And we've done our analysis on that already. If you want to go check it out in previous videos. We're not going to be talking about it today. But guys, the whole purpose of today's video is just to warn you guys, right now is really just not the time to be buying. And we've seen in the last day a pretty significant rejection from that trend line. It's a nasty rejection, it's a brutal rejection, and it's a rejection that probably caught a lot of people off guard in a sense they kind of expected a little bit of a rally from there. And I was thinking maybe we could even see a little bit of a rally to, you know, to 40,000 from here, particularly because we did kind of break, I think it was over, well, we're not quite broke over it, but we got close to breaking over a descending channel formation over here. We could have seen some sort of break outwards, but we do want to keep that in mind still, guys. You know, this trigger line at 40,000, if we can get a daily candle closing above there, we will most likely see a push upwards. But like I said, we have so much resistance, guys. We have the, you know, that 100-day moving average now hitting 40K. We have this resistance zone over here. We have our 41.3K resistance, 44K resistance, you know, 44,440 to 45,500 resistance. We've got so much resistance above us right now. It's just, it'd be absurd to think we're just going to blast through all of this. But like always, guys, I just want to point out one more time, 100-day moving average. We break over the 100-day moving average, close a daily candle above. All right, we didn't manage to do it over here. We managed to do it over here. We got instantly rejected from this range, right? If we get a daily candle above and a close above the 100-day moving average, we will push back into this range here. From here, we will have a little bit more of a positive outlook on Bitcoin, particularly keeping in mind this chart. If we are able to push up and above that 100-day moving average and actually push upwards past 40K, this could start looking a little healthier for a bounce. So keep that in mind, guys. Until then, expect the price to continue downwards. I would say a minimum target around 38K here to 37,000. And guys, if we lose $37,000, there is honestly not much we can do here. Just pack it up, take a rest. Honestly, take a week off trading, take a week off everything, because if we lose this level here, it is going to get nasty. It is going to get nasty. That is just the reality of the situation, guys. And if we go back in time, guys, we've been telling you how it is for months. We probably, besides myself, Wolves of Crypto, and maybe a few other people out there, I know personally, I can speak for myself, I can't speak for other people, but I have not changed my prediction since like $64,000, $62,000. I haven't changed it. I've had that $24,000 prediction since that level, and I haven't changed it. We've predicted this entire move. We predicted it with a pretty high degree of accuracy. I would say we're predicted with a phenomenal level of accuracy. I'm not going to bring up the chart. If you go watch my last video, you can actually, we'll bring it up now. Why not? We'll bring it up now. But we can see our initial prediction here made way back. I'm going to bring it up in a previous video. This one here, I'll just chuck it on mute. And where was it? It was somewhere around over here. Let's just zoom up over here. Here we go. All right, so there was our initial prediction, right? So around 60-ish K, we said we're coming down to 40. We're bouncing around 40, then we're crashing down. We've stuck to this prediction the entire time. We've seen it play out. We're using data, guys. We're not just using FOMO. We're not using emotions. We're looking at the chart. We're looking at the data. We're looking at the structures, and we're analyzing and making decisions based on the data. All right, remember, I'm not a bull. I'm not a bear. I don't actually care where the price goes. If I had a personal preference, I would prefer the price to freaking go to 100K. I would love the price to go to 100K. I make a shitload of money. I make a lot of viewers. I make everyone here happy. My VIP members make a hell of a lot more money. Everyone benefits. I don't benefit. I don't even short the market. I don't benefit when we go down. I don't care for the price going down. But the reality is it is going down. It has been going down for a long time. And if you can't wake up to the objective facts and you can't wake up to reality, you're going to be the person who's holding a negative 80% bag at the bottom of the cycle with no buying power and no ability to take a risk. All right, and if you can't take a risk, you can't make profit. So for anyone out there who's still worried about, are we going to 100K or we're being bullish or whatever, if you're bullish right now, you're stupid. It is as simple as that. There is nothing in the charts that I can find, unless I'm absolutely cherry picking, that is signifying we are bullish. Any fractal, any on-chain data that is bullish, it is all up to speculation interpretation. There is nothing solid besides the data that can point to well, nothing solid at all that points to it being bullish. All right, so if you're bullish right now, seriously reconsider why you're bullish. I've been telling you guys, we've been bearish ever since we lost the 100 moving average at 54K. Me and Wolves of Crypto did our first collab way back at the end of November around this level, saying if we lose this level here, we're going straight to 35K. I said that if we lose this level, we're going straight to 35K. We saw 35K. All right. I'm saying it again, if we lose 37,000 guys, we're going to 24K. There's nothing more to say. I've looked at the data 100 times. I've analyzed it 100 times. I've watched it look 8 hours a day. It is just how it is. So if you're bullish right now, I highly recommend, I'm trying to help you guys out. I highly recommend, sit there, look at the chart, plan your predictions, make your own analysis. Always do your own analysis. Weigh up the bullish and bearish case scenarios, look at your portfolio, assess your risk, and come to a conclusion. All right, guys, it is simple as that. If you have any questions, leave them down in the comments below. I always make sure I read all the comments, and I'll catch you in the next video.